We saw an excited start to the year, a bit of a tentative one because of the elections, and we saw an upsurge in activity in the second quarter. And essentially, that upsurge was because we had probably the most successful elections ever. So by the third quarter, however, we started seeing a downturn in activity, and that was mainly as a result of oil prices changing downwards because of the increased and anticipated difficulty in foreign exchange reserves and how our dollar started moving, how our exchange rate started moving. So as that started happening, people, of course, were a bit distracted from, and then, of course, you had the competing interest rates from the federal government being such that it attracted investors into that side of the market. By the fourth quarter, after the dip we saw in the third quarter, we saw a bit of a return in the fourth quarter, but of course that was nowhere near what we saw in the second quarter, and that's because, again, by that time people had settled into a totally different exchange rate. People had reevaluated their investments, and some of them have decided, quite frankly, they can't bring their investments into the country, or they're quite eager to get their investable funds out of the country into another environment. So we saw a bit of that happen over the whole of last year. We saw a bit of destabilization happen in the market. We saw a bit of risk, anticipated risk in the market as well, perceived risk in the market as well.
We know that bonds are also now available on the NASD OTC, and you have 15 to 20 brokers now trading on it. What was performance on that security like last year?
Trading on bonds, essentially, we did on behalf of the PFAs. They were the ones who were mainly trading bonds, and for all the bonds that were traded, they were mainly traded through our brokers on the platform. Trading was very easy in those securities. We were rendering returns to the market, allowing the market to see what had been traded. Again, they're public securities that were not domiciled in any market, so they easily could have traded on this platform, which is what we saw. Total amount that was traded, very little in terms of, when you talk of bond sizes, about 9.8 billion. But essentially what it did was it opened up that market. It opened up that new side of the market, which it had never traded before.
So dematerialization also played a key role in your activities at the NASD OTC last year. Let's look at how much of securities have now been dematerialized.
We have a dematerialization level of 16.9%. That obviously has a very varied, we have 32 securities trading on the platform, and the range of levels of dematerialization are between 52% and 0%, quite frankly. So some have not started dematerialization, and some have got up to 52%. I think this year we'll start seeing companies having 100% levels of dematerialization, and that would increase the average as well.
So last year you signed an MOU with LMC, and of course you attended the AGM in December. What more are you expecting in 2017?
In this first quarter, we have received already 4 commitments from 4 clubs to come into the market to essentially privatize and come into the market, sell their shares to their fans, their supporters, and to investors as well. We've got 4 of them who have written commitments. We have another 4 who are lining up to write their commitments once they get signed off from the state governments or from their major stakeholders. So ideally, by the end of this year, we should see 8 football clubs coming into the capital market to, one, provide secondary trade opportunities for the investors, as well as raise primary funding from the market.